Today, we're going to tackle a fascinating financial puzzle, and it's all about a company I'm sure you've heard of, Beyond Meat. It's a real head-scratcher of a story. We're talking staggering losses on one side and a surging stock price on the other. So how can both of those things be true at the exact same time? Well, we're going to break it down.
Right? How on earth is this possible? How can a company post a massive loss? We're talking over $100 million in just one quarter, and at the same time see its stock climb almost 9% this year. It just doesn't seem to add up, so let's unpack this paradox.
Okay, first up, let's dive into the stuff that's got investors sweating. The numbers here are pretty stark, and they paint a picture of a company that's really feeling the heat financially. $110.7 million. Just let that number sink in for a second. That is the net loss Beyond Meat reported in its most recent quarter. A number that big isn't just a blip on the radar. It raises some pretty serious questions about the company's long-term financial health and, its path to actually making money.
And look, this isn't just about one tough quarter. The company is dealing with a whole pile of problems all at once. They've got a lot of debt, sales are falling, and they've even had to admit to weaknesses in their internal controls, which is basically how they keep track of their own money. It's a combination that's serious enough to make some people whisper the word bankruptcy.
But here's where the story gets really interesting, because despite all those glaring red flags, a totally different narrative, one of powerful optimism, is playing out on the stock market. Let's see what's driving that. So what's behind all this hope? Well, it really boils down to one big thing. The company's leadership is finally taking decisive action. Instead of kicking the can down the road, they've launched a major overhaul to tackle these challenges head-on. And they're not just making promises, they have a real concrete plan. They brought in a brand new chief accounting officer, which sent a crystal clear signal to Wall Street. The mission is obvious. Get in there, fix the internal problems, and restore everyone's trust in the numbers. And get this, the market is eating it up. The impact has been huge. Analysts have definitely taken notice, and because of this new plan, their full-year earnings estimates for the company have skyrocketed by over 77%. That is a massive shift in expectations, and it's what has supercharged investor confidence. And if you want to see that confidence in action, just look at this chart. Beyond Meat's 8.6% gain this year completely dwarfs its direct competitors. And it's not just them, it's crushing the broader S&P 500 too. Both of those are basically flat, hovering near zero. It's a pretty remarkable performance.
This right here? This is the seal of approval from analysts. This positive buy rating from Zacks really says it all. For the time being, the market seems to believe that the potential for a huge turnaround is worth more than all those very real risks we just talked about. It's a clear vote of confidence in the new game plan.
Okay, so how do we square this circle? You've got all these scary red flags on one side, and this incredible optimism on the other. How can both be true? Well, it all comes down to understanding the wild ride that a stock like this can be.
This is the single most important thing to get. People investing in the stock market are always trying to look into the future. They're not just reacting to last quarter's ugly loss. They are placing a bet on whether this new management team and its new plan will succeed down the road.
On Wall Street, they have a term for this kind of stock. It's called a high beta stock. Think of it like a roller coaster. When the market goes up a little, a high beta stock might shoot way up, but when the market goes down, it can fall much, much harder. It's a classic double-edged sword. You get the potential for huge gains, but you also face the risk of huge losses. So where does all this leave Beyond Meat? Well, they're walking a tightrope, basically. It's a precarious, but let's be honest, absolutely fascinating position to be in. They're performing a high-stakes balancing act, and really, the future of the whole plant-based industry might just be hanging in the balance with them. It really is a classic story, isn't it? It's a battle between the past versus the future. On one side, you have these serious financial problems from the past, and on the other, you have a new team taking bold, corrective action. For now, investors are feeling confident, but that confidence is fragile, and the path forward is anything but a sure thing.
And that leaves us with a big, multi-million-dollar question for this plant-based pioneer. Is a new team and a new strategy going to be enough to turn this incredible vision into a company that's actually profitable? Right now, the market is betting yes, but only time will tell if this turnaround story is going to have a happy ending.